Sterling, the last video we did, we were talking about global investment, quite benign environment for China, certainly in the US, although Europe's a bit more iffy. Inevitably, we want to talk about now what the outlook is for Australia,
Yes.
for Australian investors looking to invest domestically and indeed offshore.
Sure. And again, what we've been talking about in the paper for the last few months is there's more ways to participate in the Australian market in recent times, whether you're looking at different type of instruments, even accessing different parts of the market, not only the equity markets, but corporate debt, sovereign debt, etc. And also we're getting greater access to international markets, and that's a very exciting opportunity for Australians.
Now, just talking about corporate debt,
yes,
I do realise that anybody who's running a bond fund is pretty leery of government bonds at the moment because yields are going to go up at some stage and prices come down.
Yes.
With corporate debt, is that a market that seems to be finally getting a bit of momentum in Australia?
Well, it always has had momentum in the institutional space, but I guess more in the retail, or what we refer to as the wholesale space, in other words, individual investors. There are easier and more accurate ways of getting that access.
Yeah.
Information is clearer and they fit now more appropriately inside portfolios, which is a positive.
What sort of yields are people looking at now?
I mean, that's a very open-ended question.
That's right.
It
How
depends
much risk
on the
do you want to
company.
take? Yeah.
I guess at the moment, we all know that they're very tightly priced, which is a concern with regards to what's going to happen internationally with rates in 2015.
Yeah.
But the good thing is there is opportunity along the whole capital stack. In other words, there are some good corporates at the top end of the investment grade, right down to the junk bond part of the market.
Yeah, and of course,
and that comes down to good advice and finding good opportunities, like in any market condition.
But also, I mean, are you finding that Australian investors? I realise you deal with the ultra high net worths, and they tend to have a much better global grasp. But are you finding that Australian investors have still been a bit leery of fixed interest markets because of the government bond issue?
Yes. But again, there has been a good educational push, even in the Australian. We have a great presence now with regards to corporate and the bond parts of the commentary sphere, which again hasn't been fantastic here in Australia up to now. And Australians are trying to understand what is multi-asset allocation, which again has been well developed in Europe and in North America, and we're only now sort of looking at
starting to develop
something other than just ASX 200 investments.
Yeah, exactly. Now, we've been tiptoeing around the dollar. Yes. Inevitably, that's something we need to talk about. We've got Glenn Stevens, the Governor of the Reserve Bank, trying very hard to push our dollar down from the levels above 90. What are you seeing? I'm not going to ask you to predict it.
No,
what are you seeing in the next,
I won't be caught out ever doing that.
No, that's right, because it's so hard. There's so many moving
parts.
Well,
that's the thing.
What do you see?
No one can predict the dollar. Anyone who thinks that they can is either deluding themselves or trying to delude you. But what is important in that conversation is understanding what's keeping our dollar above 90 cents. And it's quite concerning that many people, both in commentary but also in the investment communities, still don't really understand why we're seeing a strong Australian dollar. My view is because very strongly what's happening in the US with regards to what they refer to as the currency wars, that the US Fed, the Bank of England, Bank of Japan are purposely keeping their currencies weak to reignite their economy, which is fine. Australia didn't partake in that, and now we've got a consequence that we're having a strong dollar.
So essentially it's a relativity argument, and for as long as those currencies are being kept weak, we're just going to have to put up with our currency being above its normal level.
Absolutely. And the carry trade is an important consideration, so is commodity prices, but I think they're a relatively small part of the influence. The argument that's out there at the moment, as commodity prices come down, so too will our Australian dollar. It will have some influence, but not this overriding influence that people purport that it currently does. It's clearly what is happening in America, what's happening in Europe and Japan, is why our dollar is where it is.
So we should really get used to it being A, volatile, and B, quite high until such time as the US Fed and indeed the Japanese Central Bank
and the Bank of England
and the Bank of England,
all different parts
just wind in all their various forms of stimulus.
Yes.
And it's very hard to pick when that'll happen.
I mean, we're not seeing volatility at the moment, which is a concern in itself.
Yeah.
But again, it's very hard to predict. But you would think around 2017, 2018, we should call what's called normalization of exchange rates should come into reality. But again, anyone who tries to predict currency is going to end up being the loser in the end.
Absolutely. Thanks very much.
Thank you.